In this very challenging environment, I must say that Indonesia is doing relatively well. Indonesia has posted 4.7% growth in the second quarter of this year, and we see growth sitting around 4.7 for the whole year, 2015. This growth is lower than for Vietnam and the Philippines, but it's higher than Thailand and Malaysia. Indonesia's growth performance is much better than the average for developing countries, and it's also much better than the average for commodity exporters. So going forward, what we see in our forecast is a rebound of growth in 2016, up to 5.3%. The first set of factors is our corporate view that global growth will pick up next year. Not so much, but a little bit. Global trade will also pick up. Now, the second important factor is what we see in the 2016 draft budget, with a significant increase in spending on infrastructure. We see three main risks to that baseline. The number one is uncertainty about the timing and the short-term impact of the Federal Reserve normalization. Our baseline is for that normalization to be orderly and gradual. However, we cannot rule out an overreaction of markets. The second one is related to the rebalancing process in China. Again, we cannot rule out an abrupt change in that process and a more pronounced slowdown than expected. And then the third risk is related to El Nino. There is a risk of a severe El Nino going forward, and if that happens, that would put pressure on price and an upward pressure on price. We are very pleased to see the policy response that the government is currently implementing. Really, I think is consistent with the nature of the slowdown we are seeing. Going forward, we see some additional reforms that could help. And in particular, I think measures that would help to boost manufacturing exports and tourism export would be extremely important for Indonesia. And the reason is that would help Indonesia to have not only a strong growth but also a low current account deficit.